Let's start with the crude prices, which have declined below $98 per barrel on expectations of a higher weekly stock from US and combined with declining worries about protracted disruptions to petroleum exports from OPEC member Libya. On your screens, more than 1% of a decline coming in for the crude prices, $97 per barrel just about holding. The gold prices in the meanwhile also have slipped below 5-week highs as investors turn jittery waiting for the end of Fed meeting today, which is expected to throw more light on the outlook for US central bank's bullion-friendly stimulus measures. On your screen, steady to 0.5% of a gain is how we have seen the gold prices trade today. Let's get in then. Chirag Thakkar, he's director, Amrapali Group, who joins us on the show with his view on the gold prices there. Chirag, hi, welcome. The pattern of buying this Diwali has been quite different because all of these Diwalis we have seen people telling you to buy gold, but this time around it seems quite different. What kind of a pattern are you looking at?
Manisha, if you look last 1.5 months, the prices were at all-time highs around 33,000, 34,000. So what jewelers have done, they have taken a very nice resale stock from the market itself, and they have made a stock on their own to make it a good sale in this Diwali. So they now have enough stock for next 1.5 months, so that they can get a very sustainable stock to sell in the market to the retailers and the jewelers.
Chirag, what's your sense on the numbers this time around? Are you looking at a decline in buying this festive season? This whole of year actually have seen a decline as well. What are the numbers you're working with?
Yes, there will be a decline if we look after the RBI notifications of the 80-20 ratio for the gold importers. Now there are very less of the imports coming, and the imports which are coming are only for the exporters. So now if you see, if this situation continues for a longer time of period, there will be a decline of more than 250 to 300 tons of import in India.
Chirag, 3 important markets in India really are Ahmedabad, Jaipur and Bombay. Talking about Ahmedabad, because that's where you're talking from right now, how has been the market this time around?
I think if we talk about Ahmedabad, there will be less of imports in Ahmedabad. But if we talk about Bombay and Jaipur, there could be a good figures of imports because there are more exporters in Jaipur and in Mumbai to make a good export quantity for the further imports for the domestic market.
Chirag, what are you telling investors or your clients? Are you advising them to buy gold right now or perhaps later with the kind of premium that we have seen in the markets?
I would advise people to wait for the further fall in the gold prices, because if you talk about the rupee, it has already depreciated at 69 and now it has stabled around 61, 62. And I'm looking for the more appreciation of the rupee just because lots of measures coming out from the RBI just to cut down our account deficit. And if that happens, if good data comes around for our Indian economy, I'm looking at the rupee to come at around 58 to 60 per dollar, and that could be a good appreciation and a good price fall in Indian rupee terms of gold prices. And looking at the international gold prices, I think 1400 is the highest level. I don't see gold going above 1400. I think it should come back around 1250 or 1276. Right now it's trading around 1345, 1350.
Chirag, you talked about the gold prices. What's your sense coming in for silver prices now for the coming next 3 to 6 months? How do you see the price ranging?
I think it would sustain around 45 and 52,000, but I think 46,000 is a good level to buy for the silver.
All right, Chirag, I appreciate you joining us with your sense on the gold and silver prices as well as the demand pattern arising out of this Diwali season. With that, let's also get on board with us Tarun Satsangi of Globe Commodities, and also joining us is Vijay Bhamwani, author and CEO, BSPLindia.com. Vijay, to you first, and while we are talking about the gold and silver buying every day, this Diwali definitely is different because everybody we seem to be getting on channel is advising to stay away and perhaps just buy token, if any.
I would sort of agree with that view, Manisha, because the kind of parabolic rise that you've seen in gold over the last couple of years may be a little tough to sustain unless you have fresh a set of data triggers to support this kind of a parabolic upthrust. Where levels are concerned, I think in the coming, up to the coming Diwali of 2014, I would expect gold to go up to 34,000, maybe 500 rupees here or there. That's where a whole lot of overhead supply might just come in. And in case there was a decline, I think it could go all the way down to 26,250 to 26,500 also.
Tarun, what's your sense between gold and silver prices? How are you buying it in the intraday market today ahead of the FOMC announcement and, of course, slightly longer term as well?
I think for the day, if we talk of silver, I think it is basically in the range of 49,000 to 50,330 since couple of days, and we continue same view for the day itself. If we talk of gold, I think it is quite susceptible for 200 to 300 points correction from here, as we have seen a reaction slightly on negative side yesterday, which is hinting the corrective wave to continue, especially in domestic market today. But talking of multi-week time frame, I think we see prices to remain in the positive vicinity, which is backed by the weaker dollar outlook, delay in QE3, tapering by the US by March next year, along with the supply squeeze in the domestic market. We are eyeing 29,500. If that level will come, definitely we will buy for a target of 3 to 4% return.
Tarun, also, what's your sense coming in for the crude prices now? Because that is a place where all the fundamentals seem bearish.
I think it is gradually heading towards $95. Afterwards, we can see somewhere around $90 per barrel. Prices are correcting because of supply in the market. If any relief rally will establish in the market, that will be fizzled out. If we talk of WTI crude around $102 domestically, 6150, 6200 is the area where any relief rally will, if come, then will fizzle out. We are hoping in domestic market around 5800 to come in coming weeks.
Vijay, what's your sense for the natural gas prices? Because that is a space, while still positive in 2013, has seen a lot of choppiness and decline in the recent days.
Manisha, it's locked in a band, and the 238 to 242 levels will act as a kind of a barrier which will be fairly difficult for the bulls to overcome. And unless that really happens, a fresh upthrust in natural gas will be a little elusive. On the flip side, I don't see it going below 214, 216 kind of level. That's where fresh buying would emerge, because at 214, 216 odd levels, natural gas has the potential to appreciate by about 15 to 20 rupees for a momentum player to come out and grab a short-term trading opportunity on the long side. So if it starts getting into 218 or sub 218 odd levels, I would start to accumulate natural gas with a clear view to offload at 228 to 32 odd levels.
And the base metal space has been one which has seen a bit of a gain coming in today, especially because of the kind of data that we have seen come out of China and, of course, some drawdown in the LME inventory as well. How much of an impact do you see of that on prices, Tarun, especially in copper, where we have seen some positive moves?
I think some gradual recovery is most likely case for copper. If we talk of domestic market, I think we are gradually heading towards 455, 460. And if we talk of LME, I think we can see again $7,400 there. But it is likely to continue its ongoing medium-term consolidation range of, if we talk of domestic market, 440, 460. And we don't see major activity because copper is well supplied for this year.
Let's move on to the agro commodities now, where you have seen the turmeric futures decline to a new contract low due to high carry-forward stocks, subdued local demand and expectations of a better crop as well. Buying is poor despite the festival season, and that's the reason you have seen more than 2% of a decline coming in for that. Jeera futures have bounced back from a contract low on bargain buying, supported by expectation of pickup in the overseas demand, offsetting large spot supplies. Take a look at the sugar futures, and those have continued to decline, trading near their 16.5-month lows as bargain buying offsets ample supplies and sluggish demand from bulk consumers. Many mills, especially from UP, are dumping sugar in the market, and that's the reason you have seen decline continuing into this space. Vijay, what's your sense now coming in for sugar prices? More declines is what you're anticipating?
Manisha, I think you're heading towards the lower end of the trading band in sugar, although I think the 2,725 to maybe 2,750 levels would offer a fair degree of comfort to a positional player who could go out and buy the mid and far month contract. So another 120 rupees decline from here, and I think sugar has done its decline. And you should start to accumulate sugar, because there is a decline in tandem with what I was expecting. Being a pre-election year, there would be a concerted move to have the market oversupplied with physical stocks, especially ahead of the festive season, to curtail food price inflation. But being an essential commodity, I don't see sugar falling to levels below 27.50, 27.25 odd levels. So I would bet my money that around those levels, going long makes a sensible option here.
Tarun, what's your sense now for the soybean or the edible oil space as a sector, because the festive season seems to be doing good for them?
Except castor seed, I think we may see jump of 3 to 5% in all the edible oil complex. Soybean is looking firm, and I think in the coming weeks it may rise towards 4,400 also, because of recent lower revision of production by the main body like SOPA. They have revised their domestic soybean production from earlier estimate of 14 to 15 million tons to around 11 million tons, which is quite supportive. And if we talk of recent last 1 week's activity, which is clearly indicating that we might see some further up move.